Good morning, folks. Let people populate in. Welcome. We'll get started here in a few minutes. Give people a chance to come in, have a seat, grab out their pen and paper, drink their coffee, depending on where you're sitting. Morning. What's up, Glenn? What's up, Evie? What's up, Shelby? If you guys have questions as I do this, you can always populate them in the chat. We'll keep it on them. Start here in about another minute and 15 seconds. This is being recorded, so we'll make the recording available. All right. Outstanding. Let's get started. Hello, folks. Obviously, you found out about this because you follow me on social media, or you got this shared to you, or you're in our Discord. Just a little bit about me, guys, as I do this analysis work. My name's Sean, known as Student Alpha. I've been trading the stock market for 8 years now. I have unlike many influencers, uh, I don't consider myself an influencer, an educator, but many people out there on the internet who trade or promote trading or investing. They don't have the education level that I do. Uh, I'm a certified research analyst, having gone through the CMT program past level 1 and level 2, which have extremely low passing rates, and then the experience behind it. But more importantly, we're changing people's lives with uh, learning how to do this. I think that's the most important. Outside of my experience and success, we're changing lives. So just had another guy this week quitting his job. So his name's Corey. Is Corey on? He may or may not be on. I don't see one. So, but at any rate, uh, as you came in, you saw a disclaimer. Listen, guys, it would be remiss of me as we're doing this. These are my views as a research analyst, how I would trade it, ways to enter, mitigate risk. But the risk is yours because trading and investing, you can incur risk up to maximum loss. And in some positions, depending on how you're trading it, you can lose more than your initial investment. So it's very important that you have education when you do this and you have discipline when you trade. Put all this together with a successful system and education, guys. Nothing has a return on investment like this. It's just that simple, right? Before I get into the charts, one of the things that I do at the Student Alpha is we do we day trade our motor, whatever that is. For some people, that's a couple $100. For some people, it's a couple $100,000, but it's irrelevant. And we turn that into fast profits in about an hour a day, right? And we maintain the size of that motor, whatever it is, all right? That generates the profit. And then those profits roll up into swing trades. And then those swing trades roll up into um, long-term investments, dividend holders, like what you would pay a broker for. And so we are very active investors. That's not for everyone. Um, you can always hire a broker, pay them a percentage, and they can just manage your money. And that's fine too, because a lot of people don't do that. But I'm here to show you what I'm looking at. So again, if you have questions, feel free to throw them in the chat as I go through this. The reason why I'm doing this, and I did it on short notice, and I know there's going to be a lot of people that are going to see the reel, like, oh man, I wish I would have been there. That's why we're going to do the recording, is because the thesis really changed this week with data that came out, right, from uh, crypto and metals kind of pushing downward. And then we had explosive move upward, and I got inundated by questions. questions. Because a lot of people like to trade gold and silver and other precious metals. So like I'm going to do a webinar. We'll get it recorded. That way, because I was asked, and if I'm asked in the future, I'll have the answers for them, right? So, and then as we do this, guys, I'll push out my links if you don't have them all, so that you can follow me. For those that don't know, I am live every Monday through Friday at 9 a.m. Eastern Standard Time, this exact time, on social media, both Instagram and YouTube, where I go over the view of trading for the day, right? So, you can spend 20 minutes with me and get an outlet uh, for the day and ask questions for free, guys. I'll throw this in chat right now so you have it, and I'll throw it up there a couple other times for other people to come in later. So there's all my links. You guys, you can grab what you need and follow me. I'm not here to sell you anything today. This is genuinely free. If you like the information and you want to learn more and follow me into where I have some paid products, I'd love to have you guys. So, genuinely here to help you guys, right? Because there's definitely some money to be made. Let me know real quick, chat. Where are you guys at? Where are you from? Where are you sitting as you watch this right now? Let me know in chat, guys. Just kind of curious. I know the problem is we got kind of a worldwide footprint, and it's just hard to match a time that works for everybody because at some point somebody's going to be asleep, or at some point somebody's at work, or at some point, you know what I mean? So we got UK over in Maryland. All right, good. Throw it in there. I'll take a look as we do this. She's from Cleveland. Yep, excellent. All right, I keep throwing it in there. I'll take a look at it. So let's first talk about mm, why these things are moving right now. These things being precious metals and crypto. And then we have, I keep looking up because I'm monitoring some information I want to drop. Yeah, Glenn, you're a stone's throw away, brother. Um, but the reason why they're moving, right? Um, there was a spike in the long dated US Treasury yields. Now, you don't have to be heady to get this. I'll kind of explain it to you. The 30-year yield reached levels not seen since 2007. You remember what happened in 2008, folks, in the United States? Do you guys remember? Yep. Housing bubble burst. You know, I'm not going to get into cup half empty theory, but I think we're going to expand this bubble a little bit more, but at some point it's going to get ugly. We just got to protect ourselves, but there's money to be made here. But anyway, and those levels haven't been seen since 2007. Actually, they reached around 5.3%, driven by inflation worries, fiscal concerns, and then the debt dynamics that we have going on in the United States. We reached $40 trillion in debt, right? And that pressured equities, especially the tech and growth stocks, and because of the higher discount rates and then competition from the bond market. You don't have to understand all this. I'm just explaining why it's moving. So what Scott Bessent did, the Treasury Secretary did midweek, is he surprised everybody with plans to double and maybe higher than that uh, expand buyback repurchases of long dated bonds, which temporarily eases those yields, which supports risk assets and crypto, right? So like gold, silver, those are risk assets. It weakens the dollar, and all that boosts metals, right? In layman's terms, a weaker dollar is stronger metals. We're weakening the dollar because we are printing it at a massive, massive rate, right? Which, on another note, why do you need to tax people at the rate you're taxing them when you can just print what you need? That's a conversation for another time. But it is what we have. So that is why it's running. So these risk assets are running. So or hedges against a weaker dollar. I will say too, another thing that will affect metals um, is, let me start sharing it out. Second, let me find my share bar for you guys. I don't have my I don't have the setup as I normally do. There we go. So oil up generally means dollar up, right? So we have two things working I'm sorry. Yeah, oil up and dollar up. So we have two things working. So the petrodollar, right? The higher oil gets, the stronger the dollar gets. So the stronger the dollar usually pushes gold down. But what it is, it's a seesaw. Like which is affecting it more. So if you look at this is WTI, or the underlier for gold future or oil futures. As this goes up, we expect gold to weaken a little bit. However, we've seen that decoupled, or what's known as the negative Pearson correlation, the opposite relationship in layman's terms, drop over the last, to anecdotal evidence, about last 4 to 6 weeks, because the thing that is moving more importantly is this right here. This is the DXY, right? The DXY is the US dollar index. So I threw it on a chart for you so that you can see this. When the DXY index, okay, you can just go to your chart and type in DXY if you want to monitor it. There's a way you can overlay it across your gold chart. When DXY is up, metals are down, right? So it's an inverse or negative Pearson correlation between the two. And then DXY down is equals metals up. Now here's my predicted level that we're gonna come down and test for this, which correlated value in that is roughly 40. I think I did 4,800 in gold if it touches this level. So this is what's known as a half mass formation, a drop, consolidation, and then another drop. It's an exact measurement you can use. I teach all this stuff, guys. So you just kind of have to take it at value right now. Like, how's he making that up? This is all. Um, but again, if you have questions, I have time. I'm happy to also teach in this segment. Um, I do have a hard stop today. I'm going to go golfing with my dad. Um, Spend time with dad today. So um, I'm a terrible golfer. It's just more about hanging out with my dad. So, uh, but anyway, we get down to 96, 97, and then you can see, where was this? If you look at January of 2026, where was gold in January? Right there. See that? That's where it peaked, 5,600. So those are going to be very close. If you look at the DXY, again, this is just overview, right? We're going to get much more technical and potential entries for you if you stay with me. Um, when the DXY was at 95, that's when we saw the all-time high. So this level is support due to market structure. You can see when you're looking at candles, and again, I don't have time to teach a ton of stuff, but these bottom wicks, or what's known as shadows, that's these long sticks on the bottom of a candle. Those, at some point, sellers push the price all the way down and buyers push the way back up. Okay, what does that mean to you when you look at a chart? What that means to you is that in this pool, this consolidation right here, you can see market structure, buyers are sitting. Uh, Buyers believe that that's a pretty good discount. Now, what happens is if that level breaks, so currently that is known as support, right? Okay, where supportive buying comes in to the market. Now, that buying could be one of two things. That could be people buying a discount, right? This is where they are entering the market, but it is also where they are exiting the market on a short. So if somebody shorted this, in other words, sold this down and they're taking profit here. So it could be somebody exiting a short trade or somebody entering the market new. But regardless, that is what we're seeing as current support. If and when that breaks, all right, and I talk about, remember, all technical analysis and the stuff I teach and stuff I lead people through is the search for support and resistance and how to trade plan around it. You're going to hear that theme today because we're going to find support and resistance and then we're going to trade plan around it. But once it breaks this level, reconfirms it and heads down, then we look at market structure. There's your next level, there's your next level, and that's where we're testing all-time highs. All right. So this is potentially what may happen. Now, keep in mind, a new catalyst could come in, right? And it could push it down through those levels, but it could also push it up. That's why in any trade plan, you don't want to be naked, right? And now I'm not talking about you sitting at home right now with no clothes on, sitting at the computer. I'm talking about having no stop loss on your trade plan to be protective. So anyway, in a nutshell, that's why we've seen a change in metals and crypto running. Does anybody have any questions about that? is then because I'm gonna head into the charts now. Make sure everybody feels good about it. All right. So let's get into gold. And again, if you end up with a question, throw it in the chat. We'll see it. Let me bring my chat over so I can see it better. Too many monitors. Interestingly enough, a lot of people think that they have to have this crazy fancy trade set up and a lot of expensive money put into trading to be so. You don't. I mean, my first $500,000, guys, from a laptop. I didn't buy a supercomputer. I had a goal for myself: make your first $500,000. Then you can. I spent 5 grand on a computer. So you don't need elaborate setup. You don't need to put a ton of money into monitors and supercomputer in order to be successful. So, all right. So I'm gonna back up a little bit. I put the links again that are in the chat on my YouTube channel every weekend. I put out a weekend update where I monitor a lot of these assets for you. Today's a little more in depth, but we talked about this was a descending triangle, key levels, all right, so what a descending triangle is, where you have level support identified at 4,000 and descending resistance. In other words, every time it runs up, sellers are pushing it down harder against the base of the triangle, right? And its height is measured about 450 to 500. You can see it right about here. Okay, all trading is probability, and that's why we do technical analysis, right? So the other way to think about this is and people that hate technical analysis, like, oh, it's just gambling. Yeah, it is. Anything you do in the stock market, it's gambling because you're throwing money in there and you hope it goes up or hope it goes down, depending on size of your position or side of your position, not size of your position. However, what we're able to do, all right, through mathematics and through back testing, is put the house odds in our favor, right? So this formation had a 68% chance of breaking down. And how far does it go? It breaks generally the height of the triangle that it enters, right? So what is that? 524 points. Okay, so a 68% chance. And I talked about this if you want to go back and review some of my videos. However, at the time, we said that 4,000 still can be support, but we identified that if it breaks down, we were probably going to head that equal amount down here. And that's why this resistance zone was there. And we were calling that consolidation zone a probable target, right? So you could have, we talked about it, you could make a short plan that when this broke, you could sell it, put a stop loss just on the other side of the zone and try to write it down. Well, what happened was the 32% chance that it breaks upward occurred. And that is one of the strongest moves in all of technical analysis, right? You can see how explosive it is. And we expect that it's going to run minimum normally on the first move, the height of the triangle. Look what happened. Right there it is. See that? I'm not making this up, guys. I've got horrific, thick books from the CMT program that teaches all this, and I try to impart this to my students. So this is what happened. So I don't want to sugarcoat anything. If you took, again, probabilities. So this is a short trade plan. If, anywhere in here you took a short, say you shorted, on this day it broke and you shorted 39.75 and you were trying to take profit down in this box and then you would trail it and you had a 70-point stop loss. What would have happened here? You would have been stopped out, right? You could have also taken the exact opposite trade plan, entered on 40 or 4,000 holding with a stop loss below one of the previous wicks and market structure or commensurate with your risk, and then try to run it upward to the all-time high Anchored VWAP. And I actually talked about this on my video a couple weeks ago. And if you got this, you got paid massively. So, but here's the thing, losing 70, let's say you lost 70 points here and then gained 500 over here. What's your net? 430. And the reason why you're successful is the disciplined stop loss. I've worked with so many traders worldwide who would just buy, like, let's say, I get this message all the time. Hey, Sean, I bought at 4,700. It's at 4,000 now. Should I cut my loss? Holy shit. If you're on leverage, You probably got to sell your house. You see what I'm saying? You're better off to mitigate risk as you do this. And remember, it's like net trading. So if you take a 70 point stop here and then gain 400 points here, you got net 330. This triangle is on the daily. Best seen on the daily right now. I didn't look at the weekly. Yep, it still exists on the weekly too. Right? See it? It's a good question, Jenny. All right, so let's talk about trade planning for this. First of all, does anybody, if you own gold currently, and I'm looking at the underlier, okay, gold futures, we trade that in my war room on the daily basis and on a swing basis, but we're looking at the underlier, gold spot. The If you own it right now and you need help with a stop loss, let me know. But the way I would trade is we had a 1 day close of this red line. What is this red line? This is the all-time high anchored VWAP, right? It's the volume weighted average price anchored to its all-time high at 5,600. That means that's what investors are paying on the average since it hit its all-time high. Okay. And what we have is we have a 1 day closed filter of that. So um, that you can, I don't know how well you can see it, but we closed above that. So let me move this out of the way. That is an aggressive buy signal. If you get a second day open and close above that, that is a confirmed buy signal of that VWAP. Okay, then you want to bring in other tools to confirm that that is a buy. All right. So I want to talk about if you were to at open, what we opened today at 6 p.m. Eastern Standard Time, and we get a push up, how would you trade this? Like I missed this move, Sean. Um, how do I participate? How do I protect myself? Here you go, guys. So I'll do it on daily, but you can zoom down on your time frames, right? In other words, get more myopic to get a more precise move. Where on a daily, you might, the difference between trading on a daily and say the 1 hour or 30 minute might be a difference of 25 points, right? By the time you see the entry. And some of this stuff I may say may not make sense because I'm not going to be able to cover it all in the time we have together, but uh, and you can see my links. You can come into my free Discord. You can ask questions. I've got my free VIP trial. We go over a lot of stuff every day, the more myopic entries. And yes, you can foster a myopic day trade into a longer term swing. It's like starting a fire, getting it going, babysitting it into a full blaze. Okay. Multiple strategies there. Um, However, say you wanted to invest in this at open. So I'll use this, right? How do you put your stop loss in that? And then where would I run it to? Well, clearly the all-time high would be a price target. However, there's going to be multiple stops above that. You want to look at market structure. In other words, what market structure refers to, gold was technically in a downtrend. If you can't see that, I will draw it out for you. See that downtrend? Okay. And the peaks of each one of these, so the lower highs, the lower highs, the lower highs create what is known as market structure. When you hear what that means, those are where sellers exist. So as price rises, we will run into selling pools. So there is, let me draw a line. Actually, let me borrow this line. There's a selling pool. There's another selling pool at 4,900, 52.39, 54.24, and then the all-time high. And guys, remember, there's psychological zones around that. There's going to be a buffer. It's not the exact price. It's probably 25 to 50 points on either side because people try to outposition each other. If you follow me and you understand the use of the matrix and the way that we do psychological positioning, which isn't me making it up, it's industry standard. People with my education level generally work for hedge funds, guys. I I run a trade group. So I don't want to sit in a cubicle and I don't want to work for the man for 250 to $400,000 a year. I can do that by myself, hanging out with my people, hour a day trading. So all that to say, they're seeing this too. Now, one thing we can use here that is a very good tool is the Fibonacci. I'm doing this a lot on gold and I'll do it faster on the other metals because it's all going to be the same. And again, if I say something you have questions about, please throw it in the chat. So we have, um, I would do a fib extension from its base to 4,400, whoops, wrong tool, to 4,400 where the height of the triangle began, right? So once we follow this consolidation and form the triangle, because I'm going to show you something. Fib extensions are great for price targets. If If only I knew how to make a fib. Holy cow. Coffee hasn't kicked in yet, guys. There you go. All right, so the 1618 is a great Fibonacci target, and that's right about 4,700. You can see that. Don't worry about it. It's based on golden ratio. You can just get on your favorite AI and say, hey, what is a Fibonacci? Because I don't have time to teach right now, but these are key. They form key levels of support and resistance. And then the fib extension is a great place for it to run to. So we might get, based on its Fibonacci, we might get a push up to 4,700 from 4,600 and then come back down and test that 4,600 to get a confirmation that this is held. All right. So on the chance that uh, tonight into tomorrow closes above there, you can trade plan, you can buy here and try to run this upward. Keep in mind that about every 100 points, 4,700, 4,800, 4,900, and most definitely 5,000, there will be resistance. Resistance created by selling pressure from people entering short, and remember, closing long positions. And you can follow it up. Now, if you want to hold this long term, you can target 5,000. That's my end of year price target. Believe it or not, a lot of people have it higher. I think it'll run up and potentially pull back for some profit taking, but then you trail it. What you have to watch is your risk. Right here, if you enter on this all-time high anchored VWAP, which the price right now is, we'll call it 4,600. It's just a hair below that. You know, you could have on a swing trade, you could have 100 points of risk, but you got to watch your leverage. That may be too much risk for you, right? But if you're looking to make 400 points and you have 100 points of risk, that is known as a 1-to-4 risk reward ratio, which is industry aligned and book standard. In other words, 1-to-4, 1-to-5 is appropriate risk to reward. In other words, hunting, 25 points with 100 points of risk is inverted. I have too much risk for little reward. And then what happens is, as the investment goes on your side, say it goes up 100 points here, you could reduce either what we call break even, where there's no loss, or just below that all-time high. So we reduce risk, and then you just continue to trail it. And of course, if you get into the trade and you're in my free Discord, you're in my VIP, or you come to my lives, and you say, "Hey, Sean, I bought at 4,600. It's now at 4,884. Where do you suggest a stop loss?" I'll be happy to give you my advice at that time. All you got to do is just continue to follow me. I'm not going to just do this video and let you go, right? Um, all right, so that's what I would do with gold. One thing I would not do with gold right here is I would not short it. Okay, so why? This level, and I talked about intraday. Okay, so very short trade plan, right? Very fast trade plan. There's your all-time high anchored VWAP. There's a zone around this. Let me turn on the matrix real quick. It's going to get kind of crazy looking in a second. There. I talked about this short for the guys that trade with me every day. What did I say? I said we will not break 4,600 the first time. I dropped down to the hourly channel or hourly chart. There's 4,600, didn't break the first time. There's the second time. There's the third time. There's the fourth time. And then fifth, sixth, seventh, it broke. And I called for my traders a short here. And if you shorted this red line, and this is, I'm running the matrix. You guys see me make reels about it. I spent $30,000 building this based on my education and experience. This thing does most of the work for you if you want to add it to your charts. I didn't throw that link on there, but it's in my bio, on my social media bio. This does all the thinking and math for you, right? Look, you could have shorted it here at 4,600. A couple times you've been drawn down just a little bit, but maximum payout looks like it was almost 40 points. 40 points on leverage, one contract is $8,000. Right? And we did that very myopically. Now shorts are no longer valid because we flipped it. We're going to retest it and probably head back up. All right. The reason why I wanted to show this to you is because on the daily we have closed above it. So those shorts are no longer available, and it's very bullish right now, guys. So again, if you have questions, throw them in the chat. If you're late, I see some people coming in. This will be recorded so you can catch the first parts of it. We'll get this posted out. So entry right now is anywhere near 45.95 to 45.25, and then stop loss commensurate with your risk. Wider risk 45.50. The widest you should be is 100 points because it depends. Ways that you can buy this, the ETF GLD is really good. So if you don't trade CFDs or futures, you can buy GLD as a holding, right? You can look at this and you see it's also approaching its all-time high, right? Which where it will have resistance, but your technical analysis for this ETF should be done on gold. So in other words, if you measure and you agree with me and you want to try to buy further up, then you can buy GLD to trade commensurate with that. And there's others. A quick Google search, you guys can find them. All right. Any questions on gold? Because I'm gonna move on. And I'm gonna start flying through some of the other ones because the TA looks a lot the same, but I wanted to take time and explain what I was looking at. Also, chat, let me know, are you finding this useful? Recognize a lot of my students. We also have a lot of guests. All right. Excellent. Good, Connor. Let me remove the matrix here. Can make my charts look confusing when I have other lines drawn on there. Yeah, FJD GC is different because it's the gold futures product. The price will be a little different, but remember, you can trade the futures product commensurate with what the underlier is doing because that's the dog is the underlier and the tail is the futures product. All right. So in a normal or what we call contango, if you ever hear that word, relationship, the underlier, like XAG, should be a lower price than its future product, SI or SIL, if you're trading micros, right? That's a normal relationship. The futures product is always priced higher. But in high demand, and we saw it happen in silver and gold on that big explosion we had months ago, they get what's known as backwardation. In other words, the future product is lower than the spot product, which means it's extremely bullish for the underlier. All right. Yeah, that's fine, Morgan. We recorded it. You can catch it in the what you missed. But yeah, do the push-ups anyway. So, all right, folks. So in silver, um, this 54 to $55 buy zone was the exact same zone as 4,000 in gold. There's an exact measurable relationship within a percentage between gold and silver. Okay. And this was also forming not as cleanly, but also kind of that same triangle, if you can see it, right? Midweek, I operate and within my group and other groups, I called everybody wanted to buy it after this explosion upward that the the movement had broken upward and the change of thesis. I said you could buy this consolidation zone here, put a stop loss right below it, and then run it to that all-time high anchored VWAP. So the call that I made earlier was buy here, stop loss here, targeting the all-time high anchored VWAP. Guys, if you watch my weekend updates, you know that IPO anchored VWAP and all-time high anchored VWAP create a lot of support and resistance. Also, if you can order off Amazon, buy the anchored VWAP book. It's $50 by Brian Shannon. It's phenomenal. And then I just threw my links and again in chat, guys, everywhere you can find me. If you like this and you want to follow me to my social media, where I do my daily lives, come and take me a 7-day free trial to trade with me. And then our trade group, we have a lot of macro information as well. Okay, so silver. Right now, it's a little late to buy silver, not necessarily too late to buy gold. Now, that seems a little strange of a statement, right? Silver is going to hit some resistance. We haven't hit the resistance area. So this was the trade plan that I put out, right? The resistance zone is this red zone. And guys, if you follow me long enough, I didn't just put these in there. These zones that I built out are months old. This is the all-time high anchored VWAP. That same VWAP that we dealt with in gold exists in silver. Volume weighted average price from its all-time high, what the average investor is paying for this. And that will be a take profit and then a short opportunity. Remember, silver is one of the, if not the most manipulated asset there is. You can Google it. The CME suppresses the prices. They change contract amounts. They do everything they can to force people to sell it because industry wants silver cheap. I don't personally, I've traded silver a lot, but I buy a lot of physical silver, right? So the time to trade this, guys, to get into this, you have two opportunities here. And people are going to say, if you didn't buy this consolidation, if you didn't buy this zone, like let's say you haven't bought it yet. And again, if you have a position in anything, let me know. I'll suggest some stop losses for you. All right, so Evgeny Cash is only 10 over the VWAP and gold is 50. Yeah, that's fine. They both closed above. All right. So if you haven't bought this, and guys, there's a lot of silver ETFs. One that if you want to buy commensurate with this would be SLV, right? So when XAG the underlier, makes the move that you like, then you can buy SLV, which is an ETF for silver, right? So wanted to bring that up on the chart so you can see it. And there's multiple of them. All right. So anyway, XAG, I would wait to buy this if I don't own it, because here's what I believe is going to happen. It's going to run up, hit that zone. There's going to be a profit take, just like I showed you on a more myopic view of gold. It's going to throw back. It's going to retest, apply throw back, and then it beats it. So you have a couple opportunities here. And a lot of people say, Sean, why don't you just buy it now if you think it's going to go there? You can, but I believe if you buy it now, you would need to incur more risk, right? Does that make sense for what you're targeting? You can reduce risk, right, and take a stab at it on smaller fractals, but let it hit this, give you a discount, and then run back up. The other thing is man, Sean, I'm not sure if it's telling me I can buy it. Well, the other thing you're going to do is what we're looking for in gold, that 2-day closed filter of the all-time high anchored VWAP. So currently priced at 73.72. If price closes above that, and we'll say it closes like we'll call it 74 and a half, twice, that's your buy, and then you can reduce your risk, but just below that VWAP or something comfortable to you below 71. You can go $4, you can go $1, right? And it depends on risk. And the reason why I bring that up is because if you're buying a leveraged product, you have more risk, right? Then you deal with expiration like that. And again, if you ever enter anything and you have questions, let me know. Where would you price target? Well, we look at market structure. Where is it going? First of all, 84 to 85 historically had been a zone. We have a lot of resistance at 89, 96, and then of course 99 through 100. There's some analysts I think JP Morgan Chase or Goldman Sachs still has this at like $250 as a price target. When they put out price targets, they're about a year out. Um, Connor, do I enter swing trades with the IPO and all-time high anchored VWAP as my main confluence area or area of interest? I do like to stack other signals in there as well, volume at price and a number of ones. Yeah, you can also DNP AG is also another good one, and actually gold miners too, guys. Any gold miner, silver miner would move. Ego, HYMC would move when gold moves. So there's different ways to trade adjacent to the underlier. All right. But yeah, I look for other levels of confluence as well. But when I do my analysis, I double weight the anchored VWAP. So if Fibonacci equals 1, volume at price equals 1, um, high low open close equals 1, volume weighted average price equals 2 in weighting. All right. So because it's that important, it's what um, the big hedge funds use to get best pricing on large orders. So, if you and I are moving $5,000 and they're moving $500 million on that line, it's pretty reliable, right? We're not going to move the line, but they will. So you can wait, well, Sean, I'm waiting $5 to get in. Yes, but you're paying for that confirmation. Does that make sense, guys? Um, if you wanted to buy silver now, and run it to that line, you got to do it on a smaller fractal. And what do we mean by smaller fractals? A smaller time frame, right? So let's get down to the hour. You can see it sold off slightly at the close of the market. If it pulls back to 68, you might be able to get in to run it back up to 71 and then just trail it. Say you get in at 68 here and you're targeting this or actually targeting higher. If as soon as price, because remember we opened today, price pulls down and starts to run up, as it tests this level, you need to go break even. Any entry below this level with an okay buffer, go break even just in case the selling pressure here is greater than you expected, right? So you incur no loss and you're able to enter at a better price. That's how you trade plan, guys. Mitigate risk, right? with a sizable reward. Even if we entered this trade, like I said in gold, even if I entered this trade and let's say oh man, I got kicked out, I lost $3, right? And then it threw back. I'm just making this up. And then I trade planned at a lower level, and then it ran and paid me $10. So my net's what? $7, right? As long as your trade plan is disciplined, you will incur loss. There's no way around it, but it's mitigating loss, small losses, and longer rewards, right? So that's silver right now. We run the matrix, which will give you a more exact day trading entry for that. And again, you can foster any day trading entry in there. Long term, gold and silver are buys. What it is right now, based on the thesis, most macro experts have gold I've read between $5,000 and $6,000 price targets end of year, and silver close to 100 and as much as 125. Right. So at the end of the day, if you are a long-term investor and you bought it at you bought it at 72 when you had an opportunity to buy it at 68, do you really care about the $4 when it's at $150? Do you see what I'm saying? Like if you waited that $4 or $5 for confirmation, and I'm a big advocate for physical metals, particularly silver. Any questions on silver? All right, I want to look at platinum real quick. Zoom back out. Platinum, same thing, guys. It's testing this all-time high anchored VWAP. It is in a downtrend. Okay, it needs to break this and break market structure in order to stop this downtrend, and that's true of all these, right? So you can see the downtrend. We are outside the standard deviation of the regression trend line on the way down, so it has a 95% chance of returning back on trend, but the 5% chance, and this is all math, this isn't me making it up, that it starts a new trend, and that potentially could be its new trend. However, in platinum, I identified this buy zone here at 1,500 and some change that hit, but that was at the same time when all metals were selling down. So we had saw the opportunity that might fall to 1,200 for full disclosure. I want to look at this backwards and say, look how right I was. We talk about trade plans either way. You have to have a bullish and bearish scenario in all trade plans. Again, all-time high is coming in. I think it sells down here and then perhaps gets into this zone at around 1,700 for the buy if you like it. So it gets up around 1,900-ish, gets rejected, and you might be able to get it in around 1750. So keep an eye on that. Um, when this all-time high, and I forgot to mention this, guys. When this all-time high breaks and holds, we are going to get an industry buy signal in what's known as the golden cross. This purple line will cross this burgundy line. Let me move this out of the way, which would occur. Those are laggards. Those are moving averages, 50 and 200-day moving average. So if we close up here and that crosses, that is a huge industry standard buy signal. Commensurate with buy signal above the all-time high anchored VWAP here. So if we get a 2-day close above that and then a golden cross, this thing is going to challenge some upper limits. And actually, look, guys, silver is the same thing. I don't know if you can see it in all this TA. Let me move this out of the way for you. So here's when this line crosses that line. Why, Sean, why are you saying industry standard? Because this is what a lot of institutionalists look for as a buy signal. When that line crosses, that's confirmation that it is bullishly aligned. And that I believe that that's going to occur when price gets up here. You can see it if you've watched this enough. So keep an eye on that all-time high anchored VWAP because closing above that, above $75 and holding is going to be really good for this. And I believe gold, yep, see, same thing. They're all doing the same thing, all-time high anchored VWAP, and we almost have this cross. Guys, when that cross happens, it's going to be very bullish, especially if we get it with volume down here. It's like putting the car in gear and smash it. So that would be gear forward. And if volume comes in, that's like smashing the gas pedal. All right. I'm going to skip platinum and I'm going to go to, was that? Oh, I did. That's platinum I was talking about. No, it's palladium. No, platinum. Yeah. Holy cow. I'm going to skip palladium. Copper, guys. I like copper. The thesis is strong on this for AI and data centers. It needs a lot in the infrastructure. I have not missed on buy signals on this, guys. This entire trend up here, I've called multiple buy signals. If you go watch my video from last week, when price was up here, I said the buy zone for this week is $6.30 to $6.40. It dropped down right in between it at 6.33. And if you bought it, you're up 20 cents. Okay. We do not have a close above the all-time high. We have sellers overhead, but you're not too late if you wait for it to close above at 655. But really, your next discount level to buy copper is about $6.45. If for some reason we get a test down to 635, you buy it. And all these guys, all these buys, guys, no matter how you buy, you want to buy in lots. Take your dollar amount that you're willing to invest, break it into a minimum of 3 lots. You go 3 to 5 lots and just start buying some of these key levels so that you can participate. Don't ever throw uh, your entire amount into one trade, right? You want to have uh, it's called bull buying, BOWL. You're trying to buy, areas. So buying here, buying here, buying here, buying here, buying here. So your dollar cost average is probably that, right? Don't go fully allocated at one time. All right, so I want to give the last portion of this to which ticker for copper? It's XCU USD is the underlier. Then if you just do a quick Google search, you can find ETFs based on that. Copper miners also, Glenn. Guys, if you watch this, you end up with a question that, man, I wish I would ask Sean. Throwing my links in there again. I got to keep throwing them in because we have people coming and going. But you can go to my free Discord there, tag me, ask me a question, ask for a chart. I have yet to not answer folks in my community. So, all right, let's get into Bitcoin. All right. So on my week, I want to be really clear about this. On my weekend update, I said this was extremely bullish for Bitcoin on the TA side. And then, okay, and what do I see? You can see how strong this buy side volume is, equalize the volume on this sell. All right. And we're approaching, so exact for the exact same reason that I told you at the beginning of the meeting. If you didn't see this, watch recording and I explained why everything's running. That this was a very bullish signal for Bitcoin. And now I want to talk about how you would trade this. Right now, again, it's too late. We're testing the all-time high, and actually the pie line, I was informed by Crypto John, is actually right at about 76,500, and that's the 314-day moving average, which a lot of technical analysts use for Bitcoin. 314, that's why they call it the pie line. It's sitting right there. But this red box is market structure resistance as well as the all-time high. You cannot buy Bitcoin now. We talked about this. We talked about this buy zone incessantly for weeks or months and months and months and months and months, right? I have a short trade plan there, but I even when this bounce, I said this is a dead cat bounce. Don't buy Bitcoin right now. Don't buy Ethereum. And here's why. We are challenging some very key resistance levels. Here it is in Ethereum. It's approximately, let me get a little more accurate, high 2600 through 2800. There's about a 100-point resistance field, $100 resistance field there in market structure and critical VWAPs, right? Even though this was a nice explosion, if you look at it on wider time frame, both Ethereum and well, let me move my, there it is. Can you see the downtrend? Okay. It needs to break that level to create that golden cross. So I think you're too late. You need to see how it reacts here. It needs to close above this in order to get what I mean by close, the daily close, the hourly close, depending on whatever time frame you're trading on. But really, swing trading is daily. This looks explosive. This looks exciting, but we're still in a downtrend. And same with Bitcoin. All right, you got to be careful here because I'm going to let you know in a second. Let me get the TA done, and I'm going to. If you were to trade plan this, you'd either buy the bottom down here, right, and try to run this channel again, or you buy the confirmation that this level's broke. So I know this is exciting for Bitcoin. I don't own any Bitcoin. I own a lot of Ethereum. So I'm excited about this move, but I met with Crypto John. He has an equivalent education to me as a research analyst, and he's an expert in this space particularly. Here's what he told me. And I talked to him after my weekend update. So here's some updated information. This line represents the Clarity Act vote, which will affect crypto, and that's going to be September 15th. He said right now there's only 11% chance it passes, which If it doesn't pass, we'll sell crypto off. The cycle low for crypto, let me put that in, is somewhere, I'm gonna put the end of October right in there. Okay, this should be approximately the cycle low. So he does not believe, remember, he's a crypto bull, right, in general, that we will break this level, right? We might get a wick coming out, so you've got to be careful. Your opportunity really to buy Bitcoin and Ethereum should be somewhere. I want you to keep in mind on this like month to 6 week gap. Does that make sense, everybody? Somewhere between September 15th and the end of October with a cycle low. Uh, Ignore the price where I'm drawing a circle, but most crypto experts are calling the cycle low around 48 to 50,000 where you can buy Bitcoin. And I have orders. If you've been following me on the weekend update, I want to buy more Ethereum around 1,000 to 1,400, somewhere in that buy zone. And maybe if I can get a skunk order in at 800. So unfortunately, it is moving crypto, but we have another catalyst behind us, right? We don't have that other catalyst behind us in gold and precious metals right now, or I'm not, I should say, in front of us, coming up. Is there some opportunity? Yes, here. And what final thing I'll say about it is, Crypto John said these are short zones. So if you want to trade crypto, you can short these areas. So you can short, right? And listen, if you've never shorted and you're only a long investor, do not do it. Shorting is a whole different dangerous animal to itself, because the risk is, when you go long, the risk is to zero. When you short, the risk is infinite. So you can short this thing off of this zone, like say 2,700 with a stop loss of $100, whatever your risk is, and then trail it down, right? Same thing in Bitcoin. You can short that all-time high anchored VWAP at about 78,800. I'm sorry, 79,800, right in here under 80,000. Remember, it's going to be a zone, and then run that back down to its last base or even into cycle low and reverse your position. And of course, you would trail this, right? We teach uh, how to do that. So unfortunately, right now, guys, even though the explosion in Bitcoin and Ethereum looks great, we're going to have an opportunity to short here. And listen, if you came to this meeting because you want to buy crypto, you're going to get your chance. But the chance or the opportunity is going to be closer to this cycle low. And let me know, chat, would you like us to do a free meeting in this period? And I'll bring Crypto John in and we'll actually help you guys get better entry. So this is bullish. I was going to wait for a buy signal above this to see how it reacted here. But talking to my crypto expert, who's also from, he believes it's going to sell back down. He said, be very careful with longs right here. Does anybody have um, any questions on that? And we'll run another entry meeting in this gap, right? So right now, this is nothing more than a false pump. Now, hindsight being 2020, we could be wrong and it could just go up, right? But I trust what my fundamental and technical experts tell me is that this is extremely tough resistance. And of course, you can trade it, you can wait for it to confirm. Okay, well, it was tough resistance, but after 27,000 attempts, we broke it. Yeah, that would be a confirmed buy, but it may not happen until after this time here. Does that make sense? All right, guys. So that's my outlook on it. If you want, I want to take this time and answer some questions, trade plans, that type stuff. Also, while you're putting your questions in there, remember every Monday through Friday at 9 a.m. Eastern Standard Time, I'm live on social media, both YouTube and Instagram. My links are there. Please like, subscribe, follow, share it out to folks. I do offer a course on how to do all this yourself. The course link is down there with myself and the other experts at Alpha Beta Report. You get 3 courses in one. And then if you want to come trade with me and learn this daily, be able to chat, talk about all these trades, as well as be in all of our war rooms, then I have the link in there to my VIP free trial. But I'm not here to sell you anything, guys. I've got one, two, three of those links are free stuff. Yep, I can post the links again if you didn't get them in chat. There you go, guys. What other questions you let me know? Are you invested in any of these and you need help? Can you choke out XRP? Oh man. Alex, be glad that Crypto John isn't here. He would throw you out of the meeting. XRP is not a good product. It's not going to $10,000. These guys can't do math. If I've had a dollar for every time, I've got buddies that think that's going to 10,000, and they're like, "Well, everybody talks about market cap, and that's not true." Like, you know what? Here's the funny thing about XRP. I owned XRP way back here. I mean, I owned way before this chart. I owned it. Yeah, I owned it at like 20 cents, and I sold it at like here. I made like 6x on it. I had like $20,000 on it. So, okay, from a technical side, let's do this real quick. You guys can see how I do this. IPO anchored VWAP, I'll throw it in there. It won't be 100% accurate because it doesn't go back far enough, but we'll use it on this chart. I like to use a white line for that. I think Chainlink's a better investment than XRP. Honestly. Oh, look at my white line where it rejected it. You think that's by accident, folks? Nope, it's not. And then we find the all-time high, which is here, and we set an anchored VWAP to that. You do is click on it. It'll do the math for you. That will be resistance as well. Okay. A dollar is a key psychological price always here, right? So $1.52 right now, it's hitting the IPO anchor view up. So I could do much longer analysis on this, but this will form a resistance field. We'll call it $1.60 to $1.90, where it's going to really struggle, right? And again, this is going to be affected by the Clarity Act. So if you like it and you want to buy it, wait for it to hit and reject and see what happens. You can place some orders at $1 with a tight stop loss and all. If you have something specific about it, Alex, I can answer it for you. I can just tell you, the few crypto experts that I trust do not like it, right? Not that it's not a viable product, but there are products out there that are a lot better. Wish I had better news for you. I sold mine a long time ago. Good though. Who else has questions I can help you with? If you're late to this is being recorded. You'll see I'll put out some reels with some automations. You guys can grab the link to the video as well. And I think we'll throw it in my Discord also. Listen, if any of this was over your head, it's fine. It's fine to feel overwhelmed. Like Sean, I kind of understood what you said because you're speaking English, but I didn't understand anything you were doing. Guys, that's why I'm here, right? We're here to educate you so that you can do this yourself. This information, once you learn it, can never be unseen and never unlearned. Like the return on your investment from learning how to manage and make your own trades is huge, right? If you want to run the matrix on your chart, there's the link. It'll make the trade decisions for you, at least help align them for you, right? Um, we trade New York Open every Monday through Friday at 9:20 after my live. You can trade with us. I just had the second person in 2 weeks quit their job, right? Because that's really what it's about is helping people to financial freedom where you can spend. And right now, I don't know if he's on. My best friend is looking to get out of his factory work by just trading power hour, and I'm going to see to it that he does it. So, yeah, you bet, guys. I want to thank everybody for coming, taking the time to watch this, and showing up. Click on the links, take advantage of some of the free resources, and please consider joining my VIP, where we will make you a savage trader. You guys have a good rest of your weekend, folks.